We are in a crazy time. The market is wanting for data, but there are some very key themes that came out this week that are definitely going to impact your portfolios, not only in the weeks ahead, but in the week ahead. So we're going to have to cover the key themes that emerged in the past week. Let's get into it. Let's start with our key themes. The first and most important one is inflation data. We got the Consumer Price Index CPI on Friday. That was a really important number for two reasons. One, because inflation is always important and it does impact the Fed, and it in fact affects all of us in the things that we buy. But it's extremely important right now because we are in a data blackout from the government because the government shut down. So we have no official economic data for a couple of weeks now from the government. And this one we got. Guess why we got that one? We got it. It was released late. We were supposed to get it earlier in the month, but it was released late. Why was it released at all? Well, because Social Security benefits depend on that number to adjust what people who receive Social Security get. That's called the COLA. And that COLA has to be reset. And it was based on inflation. So they released the number for us. Interestingly, the number was they already culminated and calculated the number prior to the shutdown. So the number was, it was an official number. We just got it a little bit late. And what we got was very positive in the sense that economists were expecting it to be slightly higher than the prior month. And in fact, it came in flat to slightly lower, which means inflationary forces may not be as bad as we expected, which is pretty good, right? Because we want to see inflation come down because we want to stop paying more for stuff. But more importantly, if we want the Fed to be able to ease credit in order to prop up the labor market, which is struggling a little bit right now, and the Fed would be concerned that inflation would be pressuring them to keep rates where they are or maybe even higher. But in this case, we got a better number. So that's a very positive thing. And that really helped propel markets in the end of the week. And I can tell you that it is likely to continue to propel markets going forward because that was big news. So that was the number one theme of the week. And that's how we ended the week. And that's a good thing, right? On a Friday, we typically have these quiet Fridays. But this week we had a nice Friday and a strong close. We're going to cover that in our market section in a second. So another huge theme of the week, corporate earnings. We had 140 some odd S&P 500 earnings announced this week. And generally speaking, those were pretty positive. And in fact, some of them were very positive. And the good news there is we're not even into the earnings where everyone gets all excited yet. Those would be the tech companies, the flashy ones. We were basically still covering some banks, some industrials, things that people usually sleep on. But right now we're watching those numbers really closely for two reasons. One, because it's got to be about more breadth, right? We kept breadth with a D. We got to have more breadth in growth, right? And so we're looking at some of these more industrial companies to see how they're doing. That's a better way to get a pulse on the economy versus how well somebody like NVIDIA is doing, where we expect them to do well. But we are seeing a broadening out of that positive move. And so I can tell you that the S&P 500, I was expecting running into earnings season, I think around an 8% growth on EPS. And we're exceeding that at this stage in terms of year over year growth of Q3. So that's very, very positive. And the market is also responding to that very, very positively. We put out a video on that on Friday. You should check out that video because I go through some of the interesting themes of the week. And I put up some very interesting charts there that you can look at and get an understanding of how markets are responding to those earnings. So that was one important reason for why we're watching earnings. But the second one should be obvious at this point, and that is we have no data. And that is the only data we have to go on. But it's interesting in that every quarter when we get earnings, you hear me talk about it a lot. I write about it a lot, and you hear me talking about it and see me talking about it. People need to focus more on earnings because that's where the rubber meets the road. I say it constantly. I try to get people's attention onto earnings, but sometimes they come right around a lot of big numbers and FOMC meetings. So people tend to lose focus on that stuff. But that stuff really drives the economy. If you don't have earnings growth, you don't have growth in the stock. End of story. Doesn't matter what's going on elsewhere. Of course, you need strong economies to support all that. But really, if you want to get a good view of what's going on in the world and the economy and with the companies in your portfolio, you have to look at earnings. And right now we have nothing else to look at. So we are looking at earnings, and those earnings are showing a lot. I wrote about that a lot this week as well. So check out some of this week's video because I really go into depth in some of these ideas of what we should be watching in this blackout of data. And so we had some generally important earnings of the week. I'll cover some of those in a minute and tell you specifically some that I thought were interesting that what we might want to take away here. Another key theme of the week are the credit markets. We had a couple of scares last week and the weeks prior, right? So prior to that, we had two companies default in the auto industry on loans. We covered that last week. And that sort of fear was out there. And then we had two banks announce that they had to take credit losses. That was last week. And the prior week, we talked about that last week, but that sort of carried over into this week with questions of, are there some cracks that we haven't noticed? Are we going to get some real fallout in the economy because of potential credit problems? A lot of crises start with credit issues. Remember 2008? I hope so, because that was all about credit. And right now people are concerned that maybe credit's still an issue. And so what we focused, a lot of the discussions of this week focused on, especially in the public eye, were banks or any lending institutions really being put on the spot by reporters about how exposed they are to private credit. And private credit, as we talked about last week, and you should check those videos out because we really go into a lot of that depth, that this private credit, this burgeoning industry of private credit is really financing a lot of companies differently than traditional banks would. They're underwriting loans without being monitored by federal agencies, et cetera. And they could do a lot more. And some of these loans are really odd structures and you don't know what could possibly happen. Interestingly, they loan these companies and the private credit lenders, they get their money from some banks. So at the end of the day, if the companies fail, the private lenders fail, the banks could fail. So this is, as you can see, for obvious reasons, this is top of mind right now for investors. And so we had a lot of those discussions this week. Those are not going to go away. This is going to be a recurring theme, and we are going to have to watch this stuff carefully. We will be talking about it often right here. So that still was overhanging the market. That was the flashing yellow lights that I continue to talk a lot about. We also, this week, some AI. So we didn't have a lot of AI tech earnings this week. That's coming up next week and in a couple of weeks. But what we have heard in the past week in terms of companies just talking, CEOs out on the speaking circuit, we've seen some very positive uplift on the week that helped, of course, markets go higher. But remember, stocks that we're talking about are highly volatile stocks. It's just their nature. So they can be up a lot one day, down a lot the next day. But generally speaking, at the end of the day, when the smoke clears, there was a generally positive sentiment on tech and AI. And it's important because while we're happy that the breadth of the market move is broadening, we still rely on tech to be the leader because those are the ones with the biggest growth prospects. And those are the ones that drive certainly the indexes higher, even the industrials, right? Because we still have NVIDIA and the Dow industrials, right? It's not the old smokestack industries that we grew up on. It really does have some pretty important companies in the Dow at this point. And finally, we have the recurring theme of geopolitics. Of course, there is trade, and trade is always important. It has been driving this market, certainly since the minute the president said, "I do," back in January. In fact, he did wait about 2 days before he started his new trade policy. But since then, it has been top of mind for the market. And then, of course, it hit fever pitch back in March, and then it kind of eased up a little bit. And just when everybody forgot that it was even there, markets got used to the notion of tariffs, et cetera. Of course, 2 weeks ago, we had a bomb drop, and we know, because we covered it last week, We know that that China and the U.S. are far from done taking shots at each other. We're going to have that at least till next month as we close in on the end of that grace period with China. And of course, we have a lot of posturing going on. We have meetings taking place. Ultimately, there's supposed to be a meeting between Trump and Xi. That may or may not happen. Both people keep changing the rules. And so this is typically what happens, all of this posturing and jockeying around prior to actually meeting and hopefully hammering something out that we can actually observe and act on. But because those things are still up in the air, you could see them push markets higher one day, lower the next day. And as is typical from the administration, we get lots of signals, but generally pretty positive. The president is doing a pretty good job at not being dragged into too much of a he said, she said, but it's out there and it's definitely still impacting the markets. Interestingly, this week, one of the big geopolitical issues is between the U.S. and Russia. So the on again, off again discussions that may or may not happen between Putin and President Trump, those are really sort of taking center stage. Trump and the world are now putting extra pressure on Russia with further sanctions. A lot of interesting stuff going on over there. It's actually typically boring, but this week it was very, very interesting. And in the last couple of weeks, it was interesting and the market's paying attention. Why? Well, because it is a huge producer of energy products and putting sanctions on Russia, or if you see that these discussions are starting to fail, as we saw, both things, that just means less oil and less supply always means higher prices. And we're going to talk about that in a second. But higher prices on crude oil have other impacts. And we're going to talk about that in a minute. But that was really important stuff. Those were the important themes of the week. And that was a rundown of last week's key theme. Guys, if you like this kind of content, hit like, hit subscribe. It's important stuff. Get to know what's happening every single day. You don't have to wait for the weekend. So do it now. And that was our weekly recap from Truthbombs, where we drop them here before the market figures them out. Thanks for checking in with Wall Street Truthbombs. Remember, we drop them here before the market figures them out.